Welcome back, everybody. Thank you so much for clicking on today's video. Today we're going to be doing a video about Churchill Capital. Before I start the video, guys, please make sure to leave a like on the video below. Subscribe to the channel for more awesome content. Join the family, guys. Let's go on our invest journey together. So today we're going to be talking about Churchill Capital. And boy, oh boy, has it been a ride for Churchill Capital, everybody. I mean, really taking a look of how much the stock has actually tanked over the last couple of days is actually scary. I did not expect this at all. A lot of people kind of wondering why. Why is Churchill Capital tanking so much? Well, let's dive in a little bit, take a look at the charts, and then hopefully we can all decipher together why Churchill Capital stock is sinking so much. So if we take a look at the 1 month chart, I mean, this thing was trading around $60 to $65 a share. You know, people were getting more and more bullish on the fact that Churchill Capital was going to merge with Lucid Motors. Lucid Motors being an EV company based out of California, and obviously Lucid Motors is no pushover EV company, right? They plan on already delivering their cars this year alone. It's got $1 billion backing by Saudi Arabia. It's about to finish up a factory in Arizona and also plans on building a factory in Saudi Arabia as well. So it's already off to a hot start compared to a lot of other EV companies that are not really that established to really begin with. If you take at a few examples of like Hyliion and Nikola Motors, which I'm not bashing those stocks in general, I'm just saying that those stocks, you know, they hit the market, but they haven't really done anything ever since they hit the market, or it's going to take them a little bit longer to kind of get going. But with Churchill Capital, you know, people were definitely hyping it up. Rumors were running around that Churchill Capital and Lucid Motors were going to merge together. Really, this hype drove up the stock all the way up to around $60 to $62. But if we take a look at the 1 week chart, the stock is actually down 48.9%. We can definitely see this huge dip here. And a lot of people are wondering why. You know, did the merger not go through? Did something happen? Well, that's the thing. With Churchill Capital and Lucid Motors, the merger actually got confirmed. So yes, Churchill Capital and Lucid Motors are actually merging together. So a lot of people are kind of confused by why is the stock dropping so much? And for me personally, I think the sell-off is a little bit over-exaggerated. Okay, I did expect a little bit of a sell-off. This always tends to happen when mergers actually do go through. It all just depends because people want to see how many shares are actually going to be outstanding. Divide that by the actual market valuation, and that's going to put a more roughly estimated share price of what the company should actually be valued at. But I honestly think that $28.47 is pretty low for an EV giant that's basically going to hit the market and be Tesla's competitor. Like I said, Lucid Motors is going to be coming out with a vehicle known as the Lucid Air. It's a 1,080 horsepower, 517-mile range Tesla killer, as they like to call it. So, I mean, I don't understand why the stock dropped so much, but for me, I do think it is over-exaggerated, and I actually do recommend people to actually buy the dip on Churchill Capital. Obviously, everything I say in my videos is not financial advice. It's just my personal opinion, but if we dive in a little bit deeper and really look about how everything has been going on, yes, the EV in itself, the EV market has not been doing well. Tesla has been selling off, really causing an over sell-off of a lot of EV stocks like Ideanomics, there was NIO, XPeng, Li Auto, even Tesla itself did actually sink. I think it was like $150 in just 1 week alone. So I feel like that also had part to do with it, why Churchill Capital continued to sink. A lot of people, you know, holding large positions in Churchill Capital or soon to be Lucid Motors are really, really scared. A lot of people think they should sell out of their positions. For me, I'm taking the opportunity and buying the dip. Like I said, everything I say in my videos is not financial advice, but if we dive in a little bit deeper, I mean, this company is going to be an EV giant. Take the opportunity and actually buy the company now. I mean, the estimated sales on this company alone by 2025 already put the stock price way higher than it's currently sitting at now at $28.47. I do want people to know that, you know, a lot of these EV companies that people are buying expect these huge amounts of growth right now, but I do want people to know that a lot of these EV companies that people are buying, they're definitely going to be longer term holds as the EV market continues to evolve and as the EV market continues to capitalize on itself and really establish itself and its dominance in the car market in itself. We can definitely see that these EV companies that people are buying now, you should be looking more towards a long-term growth prospect, not a short-term growth prospect. It's very difficult for a company to continuously increase its sales and have great earnings all the time, especially when it's first starting out. But with Lucid Motors, this is not going to be any different. A lot of people do think that right now $28.47 is still an overvalued price for Churchill Capital, or soon to be known as Lucid Motors. But for me, I think it's an absolute bargain. Yes, I know the stock is down 50% of its value, and a lot of people are freaking out, and a lot of people are getting really, really scared. I just want people to know, if you truly believe in the long-term prospect, if you're bullish on the long-term aspect of a company, then it really should not matter what the current stock price is on the intraday. For me, I'm still holding my position. It's 100 shares at $17.90, and I actually do plan on buying more as well, just due to the simple fact that, you know, it's going to be a huge EV company. I know that Lucid Motors is going to do very well. And yes, we've seen time and time again, like, yes, the EV market is very explosive. The EV market does have a lot of room for growth, and the EV market in itself still has a lot of room to expand. So it's pretty easy to tell that a lot of these EV stocks are actually going to be going upward from here. Some people do speculate that the EV market is kind of entering a little bit of a bear market. We did have a huge sell-off this week, and like I said, I do believe that's part of the reason why Churchill Capital actually sank so much. It wasn't just this specific stock. Tesla in itself sank, NIO, XPeng. Like I said, a bunch of these EV companies started sinking. A lot of people don't really know why. So a lot of people do think that, you know, people are trying to figure out the valuations behind these EV companies, which ones are the best ones and which ones are the worst ones. But when it comes to Lucid Motors, I'm telling everybody, like, this company is going to be absolutely massive, and I do recommend people actually buy the dip on the stock. The company in itself is going to do a lot of great things, and I do think the company does have a lot to offer. Like I said, even if you take a look at its current share price projected by the amount of sales it's going to have in the next couple of years, the stock price isn't even close to what it actually should be. I know sometimes people do exaggerate, and this does tend to happen a lot when companies actually merge together. It's more of like a buy the rumor, sell the news kind of story, especially when it comes to mergers. But I'm sure when Churchill Capital in itself, and it starts to establish, becomes Lucid Motors, starts selling cars, like, this stock is going to be absolutely huge. Take the opportunity, buy the dip on Churchill Capital. $28.47 is a price that a lot of people have been waiting for, and it's a price that's actually still really cheap for what this company can actually bring to the table in the EV game. Like, this company has the potential chance to stand up against Tesla to be the next EV giant. Take the opportunity, give it a chance. With that being said, guys, that's all I really have to say about the video. Let me know down in the comment section below, guys, what you think of Churchill Capital stock. Were you guys surprised by the overall sell-off of Churchill Capital? If you guys own Churchill Capital stock, how many shares do you guys own, and what's your average?